So this video is sponsored by Bityard, a crypto exchange with 9 out of 10 stars by the Coin Bureau guy, 400 cryptos to choose from their spot exchange, derivatives that include commodities, forex and traditional markets, as well as inverse perpetual coin futures, USDT perpetual futures and leveraged tokens. You can even set up a copy trading account so people can copy your trades, you earn commission on those trades, or you can follow other traders who have better results than you. Set an account up with a link in the description and get mystery box bonuses for completing random tasks. Bityard. Hello everybody, welcome back. Let's have a look at Bitcoin. We'll start obviously with Nasdaq, to be honest with you, giving everything back. So FOMC meeting yesterday, 75 basis points, fair enough. That's what generally was expected, I'd say, by the majority. And we did have a decent run from that. This is your spinning top candle body on a 4-hourly saying, I don't know where I want to go. Do I or don't I want to move up? Now, if we have a look at what Bitcoin did, it's sort of had the same kind of thing. It was a spinning top over here. And if you go to a daily, it looks a little bit more bullish. In fact, that's what's known as a hammer. And if you see something like that, normally you would expect continuation to the up based on simply just the candle body on its own. So that is pretty much the only bullish thing that we've got going on this chart at the moment. And not just a hammer, but a hammer from a reasonably important area, basically $20,000, the previous all-time high of the last bull run, right? So candle body formation is what it is, but as far as momentum is concerned, currently on all time frames, still focusing on further downside and continuation of that downside. So not particularly convinced, although we do have a little bit of bullish divergence forming on the daily here. On the 4-hourly, it's not yet enough, I would say, considering the size of the downside and looking to try and play any kind of major move on a 4-hourly. You'd want to see a few more drives of this. Now we do have bullish divergence forming, so obviously all these lows forming and these lows forming, bang bang, and we could still easily get this divergence form on a third attempt. So what I'd be looking for ideally in the form of a 4-hourly chart would be for this to sweep the low again and then maybe test the upper side of the range. At best, we'd be looking for, you know, towards the top 20,000 area. It does seem kind of unreasonable in this environment that is going to be the case, especially when you see what the Nasdaq's up to as well. So, as far as Bitcoin is concerned, the area of significance would be right in the middle of here, which is where we're sort of dancing around at the moment. So this is, you know, in the middle of the FOMC meeting where we finally chose to move from a spinning top candle body to an actual green candle. But again, as you can see, it's all been given up at the moment. So if we start closing below 21,500, expect the lows to be swept and probably some new lows to be tagged. That's not particularly a bad thing, because moving moving down into below the $20,000 area, it should start to get picked up. I can't imagine it dumping down to the depths of despair as soon as it goes in there. It could, but I think it's unreasonable to assume that that's where it's going to go straight away. I think a sweep of the lows and then a bit more of a convincing rebound would likely take place from those areas. Now, obviously we've been enjoying the altcoins recently due to the Bitcoin dominance getting rejected from that area that we suggested effectively the day before, you know, entering into alts. Effectively, who would have thought that moving into altcoins was going to be a hedge against Bitcoin, but it did it exactly where we thought it was going to do. So now let's have a think about what it actually means now, and how far this can go. Because remember, this is a bullish chart. We've said it's bullish. We've been saying it's going to break bullish for months, probably best part of a year actually. We've been saying it's destined to break higher, and so altcoin positions should be kept to a minimum, because the lower the dominance chart, the more of a larger of a Bitcoin position you want to be taking. Obviously we wanted to rotate into some around here, and that's done now. I would say that's done. The sats have been stacked effectively. So this area that we're at right now is a 50 exponential moving average. Now on any kind of price chart, when you see a golden cross on a 4-hourly or on a daily, it's not uncommon. In fact, it's very common to see it get retested. So there's your golden cross, an exponential golden cross. We've seen the move up. We've got the rejection. this would be the first area where of significance for this to start turning around, which would basically mean that altcoins get wrecked in comparison to Bitcoin this time around. So unlike what we saw recently, which is kind of like I say, what we anticipated is that altcoins would outperform Bitcoin, whether it's moving up or moving down doesn't really matter. It's a way to hedge or try to stack sats. Really, that's all I do. Bitcoin is my balance, and I focus on the amount of Bitcoins that I own. The best way to increase your amount of Bitcoins is either buying or selling Bitcoin itself, or trading through altcoins, and that's what this was all about. So now it's time to really think about getting out of those altcoins, because if we do get a bounce from here, which we probably will get a bounce from here, and if we don't, we'll go down to this level, and again, that's too optimistic to expect that to happen, even though it could happen. You know, a full-on retest of a golden cross, it's not uncommon to see it come back down to the 200 exponential, which is only a little bit further away from here, but it would still mean some sats get stacked. You know, that's a decent move still, 3.5% on the dominance chart there. But I'm not willing to hang around in altcoins, particularly at this point now. The job has been done. And again, it yielded kind of what I was looking for, so between 10 to 50%, you know, versus Bitcoin really, which is done. So on average, I've stacked effectively about 25%, you know, more Bitcoin throughout these last few days just from trading those altcoins. But now it's time to think about it realistically and go, all right, well, you know, that's pretty an uncommon event to see Bitcoin go further down faster than your average altcoin. But it did happen, and this was the clue here. It's given us another clue now to say, I don't think it's going to continue on like that. So I would say that altcoins have done their business, and we'll be looking for a rebound at this point, for better or for worse. And we'll be thinking about Bitcoin dominance moving back up to this level, and maybe breaking out straight away. This could obviously happen in upside, and obviously happen in downside. It normally takes place in downside, which is why it was such an interesting trade to have made. You know, despite the overall situation being so bearish, it was like I say. I mean, it surprised me, even though I took part in it. It did surprise me to see it, and it made me think about why that would even happen. Do you know what I mean? Why would Bitcoin and Ethereum plummet so hard when all these other altcoins would outperform it? And the best thing I can come up with, other than outside of my normal remit of TA, which is why I made the judgment call and the trade in the first place, was that the balance sheet of institutions consist of effectively primarily Bitcoin and Ethereum. And they're the things that are being sold in mass, in huge quantity. They're the ones that are dumping. They're not holding, all these piles of shit that we like to hold. And so in this occasion, it's worked out well, to make that trade. But I think that trade's done now, and we'll see where it goes from here. So effectively, Nasdaq is giving it all up, coming down to do exactly worse than Bitcoin at the moment. It's a full retracement here, and if you go to a daily, we can already see the pre-market working on a bearish engulfing candle with a view to come down further. So you can only imagine that Bitcoin wants to do the same as well. So that is only a pre-market, but it's pretty hard hitting pre-market so far. Obviously the 75, like I say, has been baked into the market. We had a decent reaction from that yesterday. It doesn't look like we're going to get continuation, although the day is so fresh. This is only a pre-market. We've got hours to wait before the opening bell in America, and we'll see what kind of reaction it has from there. But this isn't a very nice reaction in the pre-market, so we'll have to wait and see. In reality, this is just one rate hike of many, and that are already more or less planned. And whether we go to recession or not, I say we. I think the UK is almost certainly going to go into one if we're not already in it already. But the States, they're saying they don't particularly see a recession. If they did, it might be next year. They've not been very convincing with anything that they say. The best thing to think about when it comes to to recession and not crude oil. Have a quick look at the crude oil futures. Coming down a little bit actually, which is nice to see. So this could be one of the main precursors as to, are we going to see a lower CPI report coming out this month or next month. I'm losing track of days. We're already halfway through. So if we start to trade down on here and oil actually breaks down and we go back down towards 75, this wasn't going to happen anytime soon, but this I think is going to be the new trading range for oil. 75 to 120. There is a chance we blow our top off and then come back down to this range. I think this general range, 75 to 120, is the new range for oil. And if we just have a quick look at the Dixie, Dixie is super bullish, baby. It's super bullish. So we're heading back up to this 106 kind of area, and with you know, I suppose with a view that it'll continue on further than that. I've just taken it to a monthly. Obviously, when you go to a monthly, we'll take it off the log scale. It is a bearish looking chart. Take all this stuff off it. It's a bearish looking chart on a monthly, but there is still plenty of room to go. You can see the breakout that took place here on the monthly, so there is a certain change of behavior, and this 124, the Dixie, would be the be all and end all. I would say it'd be pretty impressive to see it reach to those levels. I find it kind of unrealistic to imagine it would. I think if 106 breaks, we'd be heading to around 112 to 114 thereabouts, this kind of area. But it's very difficult to put lines on charts when it comes to the Dixie. Same when it comes to very difficult to put it on when it comes to oil, because those moves are being driven by things outside of the chart. So although they can be traded, and they're traded to a large extent, we can't really expect any of those resistances to act particularly well as resistance, given the supply and demand for oil, and given the driving factor of the Dixie. So far so good on Bitcoin. We are catching a bounce on this level, but like I say, if we lose 21,500, expect the lows and probably some fresh lows to be hit, and just be careful with altcoins because they are in a delicate situation unlike before. So let's not beat around the bush, let's not get too optimistic. We can obviously see a further retrace on the dominance chart to that 200 exponential, so another 3% move down. That would be brilliant, but effectively, you know, if you haven't scaled out or started to scale out already, maybe you should think about scaling out. Like I say, in times like this, when trading, especially spot trading, is a little bit more, you know, a bit more skillful, you know, don't be afraid to take profits. You don't have to go all in and all out. You can take profits incrementally, and this is what I said at the beginning of that setup. You know, the day before we got the rejection on the altcoin, on the Bitcoin dominance, you know, I'll be looking to scale out with every 10% that gets made, and that's effectively what I have done, with a view to maybe make between 10 to 50% on some of these altcoins that we've traded versus their Bitcoin pairs. So it's been pretty good. There is still some I've got riding, but again, you know, they're a fraction of what went in there 2 or 3 days ago when I made that trade. Right, I hope you have a nice day. Feel free to join the Telegram, and yeah, take it easy.